Oh dear. Welcome to Simon's Trading Channel and a bit more Bitcoin price action analysis. What a difference 5 days can make. When I recorded my last video, for your viewing pleasure, Bitcoin was at 96-ish thousand. 5 days later, it's at 84.5. You gotta love the volatility that Bitcoin brings with it. So, why, you're thinking to yourself, are you starting with the CME chart, Simon? Well, because I think everyone probably appreciates now that this CME gap that when was it created? It was created in the second week of November last year, and it is a gap between about 78 and 81K. So it's looking very likely now that Bitcoin goes ahead and fills that gap. I have to say, as Bitcoin started to consolidate up around the new all-time highs around that 100K level, I was kind of fairly sure that wouldn't happen. But really, since this breakdown over the last 2 days, so basically this week so far, it's starting to look very much like that's going to happen. So yeah, I'd be very interested in buying some Bitcoin at 78K. That I would be very interested, and we shall see what happens. But for the time being, you can see there is indeed volatility expansion to the downside. This is the daily time frame on CME. I'm going to switch over to Perpetual Exchange because you can see that how narrow the Bollinger Bands got when I was recording my last video. And I hope I said this, but I think you've heard me say it many times. Whichever side the price action is of the midpoint, which is the 20 SMA, this blue line, whichever side the price action is, if volatility expansion occurs, i.e. the Bollinger Bands start to expand, that's the way the price is going to move. And indeed, it's been to the downside on this occasion. For most of the last 2 years, when there's been those critically low volatile periods, the moves have generally been to the upside. There was one to the downside. So there have been a few, but obviously in a bull market, you tend to get more upside moves than downside, but not on this occasion. So yeah, volatility is expanding on the daily time frame to the downside, and well, that's it's a pretty impulsive move too, and there is no going back. Excuse me, in my opinion, as long as Bitcoin's below 95. That's for a daily closure. We haven't closed the week yet, so it's a bit premature to talk about weekly closures. But I'd like to see a weekly back above 90, really. So a daily above 95 and a weekly above 90 for, more upside to be the name of the game rather than more downside. Is this the end of the bull run? Nah. The timing's all wrong. If I switch to the index, which has the entire history of Bitcoin, and hide that, and then switch on to the monthly, you can very simply see, so the 4-year cycle, right? So the end of the first bull run, I mean, this is easy to say retrospectively, of course, right? But it seems to have made sense over time. So the end of the first bull run was November 13. Fast forward 4 years, December 17, so winter, 4 years later. Fast forward 4 years, excuse me, October, November, winter 2021. And then that would, if you fast forward 4 years from there, clearly mean that the end of this bull run is likely to be winter this year. So it would seem slightly odd then that the peak or the highest price has already occurred, as clearly winter is quite, I'm talking about winter in the northern hemisphere here, of course, is quite far away because we're still in winter of the previous year of 2024, 2025. So, okay, yeah, no one can be sure, but it just doesn't feel, from a timing point of view, that this is it. It doesn't feel like it's done. Also, the business cycle runs along the same. It's all the same thing, really. Business cycle, Bitcoin cycle is all kind of the same thing, and that's from a timing point of view is not all said and done either. So I may be wrong, but I feel like there's more to come in this bull run. This is a big pullback, though. This is a big pullback. Now, big pullbacks, you have to give it a bit of context. Everyone just wants it to blast to the moon, of course, because if you're trading and investing, or if you're long and investing. But it's never going to be that easy, right? If markets were that easy, everyone would be doing it and everyone would be making maximum gains. And if everyone was making maximum gains, no one would, because for every winner, there has to be a loser. Now, look at this pullback here, right? So from high to low, 30. So from wick high to wick low, for the unbelievably boring 6-month consolidation was 33%. And to give the current pullback or downside move a bit of context, it is currently at 24. So, even if it does about the same amount, 34%, that brings it effectively to the CME gap. I know this isn't the CME chart, but it's around that kind of price area. Basically, revisiting the highs of this, which you would expect from a support resistance point of view, be a very supportive, like a well-fitting bra, the ladies would say, area. So for basically around that 72 mark and above. So pull back to there just seems like a bit of a good place to buy, if I'm totally honest. If you look at the price action of this bull run so far, right? If you look at the ups and the pullbacks and the ups and the pullbacks, the ups and the pullbacks, right? Virtually all of the upside moves have had a pullback to nearly the previous high. So this is the previous wick high, price moved up, pulled back nearly to that. And there's another move up. This was the high, pull back to the high. I went through this in an earlier video as well. This was basically an up and down maneuver. This is the only one that hasn't so far. So this move up here did not then retrace back to this high. Back to the high. So you can see where my line is, this high and this wick low. And, what I'm basically saying is that I think it's likely that Bitcoin pulls back to the mid to low 70s. And that just sort of fits in with what's happened so far in the bull run. I've got a little chart that I haven't shared with you yet, but I generated this through AI. I think it was Claude or whatever. But this is what I use for a slightly more objective way of looking at the market cycles of Bitcoin. And so you can see when price is above the blue line, that's your long. And then if you want to short Bitcoin, or at least get out of your long or your investment and wait for a better price, then you exit when it goes red and the price is underneath it. And then when it's above it, obviously it's upside price action. When it's below, it's downside price action, etc., etc. And it works perfectly, save the coronavirus sort of little blip down and up. So as you can see, it picks out very nicely all the bull runs, all the bear runs. And don't need the stochastic on there, probably easier to see like that. And it just keeps you on the right side of the market. Now, it's not infallible, because if you didn't enter at the right point, then it's going to be a bit more tricky. So if you entered along here, well, you're going to make a massive loss, right? If you follow it. I mean, if you're just buying and holding Bitcoin, it doesn't matter too much where you enter, and you can just ignore what I'm saying. But the reason why I find that a little bit tricky is that I understand the buying and holding Bitcoin thing, and I'm sure it will be, the world asset at some point. But until that becomes the case, I feel like you need to have an area where you take profit, and an area where putting your hard-earned cash into it is more efficient. And clearly, it's more efficient to have bought Bitcoin on the 10th of December 2018 than on the 4th of December 2017. And anyone who did that, that's obviously up to you, and none of this is financial advice. But I'm just making the point that Bitcoin maxis are just buy and hold, and you'll be fine, and you probably will be. But that sort of commitment without any objectivity, for me, feels almost a bit religious, and I'm not there myself. So this is a nice chart. I like it, and it just keeps you the right side of things. Now, referencing my own point, so what if you did enter here? Well, I have another little trick up my sleeve. So, for example, as you can see, on this chart, you would still be in a long position if you entered here, right? Or anywhere else along there. That depends on your how comfortable you are and when you want to take profits. So what I find this is just for me, and I'm sure people have their own versions. What I like to do is combine a couple of little tricks. So that's the same chart, right? But on this side, I'm going to put more of a daily trading strategy. And the reason I'm bringing this up is, as you can see, it has just recently, go away. It has just recently taken me out of my long. I haven't shorted, and I'll explain to you why. But what I've done is taken my profits. So if you compare, this is basically the same as this, right? So this is a weekly time frame. There's the bottom. And this is a daily time frame. There's the bottom. And so all of this was in a long position, or buy sort of a buying bias. Well, the good thing about using them both is that you can look for entries. So when you have a long bias on a weekly, you can then wait until the next long trade or bias comes up on the daily. And if you combine the two, then you're very likely the right side of the trade. From all to say all the time, I mean, I don't think anyone's always the right side of the market. In fact, nobody is always the right side of the market. I certainly am not. But this kind of combination of strategies that you can prove work, because I backtested these are strategies that I've created on TradingView. You can see the results. So you want to see the results of this one, you just go down here and look at the overview. And the green line is the trading strategy, the blue line is the buy and hold, right? So it's better than the trading strategy. is better than buying and holding. And same for the other one. This is a profitable strategy too. And the combination of a shorter time frame with a higher time frame works in my mind. Maybe it wouldn't work in other people's. So yeah, I've closed or sold my Bitcoin for the short term. Because the longer term time frame is still in a go long setting or a buy setting, I'm waiting for the next long. And that brings me on to my next point. So I'm just going to switch back to a one-page look. But I didn't want that page, I wanted the other page. No, do I want this page or the other page? But yeah, so I think this is a significant move, right? Which is why I think it's got more legs. Now, if Bitcoin does a down and up move here, that will annoy a lot of people because probably quite a few people like myself have got out of the long positions or sold the Bitcoin waiting for a better entry. And when it goes down and up, that just ruins everyone. So that might happen. And, that would be classic market behavior, particularly for Bitcoin, just to annoy everyone. But I get the feeling it's not going to do that. And I get the feeling it's going to kind of come down and spend some time around the sort of 70s region. Now, I could be completely wrong about that. But that would be good because that would give time for this strategy to then get ready to print another long. And as long as my weekly strategy is in a long at that point, then obviously I'll be going long. However, if it spends enough time hanging around here, then as I'm sure you can imagine, if I switch over to the weekly again, come on, you can do it, there we are. So if the price comes down and starts to hang around here, you can see at some point it will then close below this basically is the definition for me of bull and bear markets. And if it did that, I would have a downside bias. I would be thinking, my goodness, this really is that really was the top of the bull market. And I'd be looking then to not be buying more Bitcoin and then waiting for everything to switch back long. But that's potentially going to take a long time, maybe another year or so. That's unless, of course, something disastrous like this happens, COVID-19. Now, it would seem a bit harsh on the world for that to happen just a few years later, to have two kind of world events. Because remember, COVID-19, the world went on standstill. Now, wars in Ukraine and Russia, significant, of course, and terrible for the people who live there, but it's not the world on standby. And geopolitics being a bit fluctuant and tricky, again, it's a big deal, but it's not the world on standby. So a significant move that flips this into a bearish posture, for me personally, unless the world goes on standby again, would be the end of the bull run and therefore make this the high. I'm just not there yet. I'm not there, and I won't be there until this changes. Wow, this turned into quite a long video, so I think I'm going to sign off on that note. I hope you've enjoyed it. If you have, please like and subscribe, and I'll catch you next time. Take it easy, guys.